Well, as you rightly said, there's a lot of uncertainty around the globe. Particularly, it has become sharper now with the talks about the Indo-China trade wars. But there are several other pockets as well of uncertainties. This is good for gold. As you said, any uncertainty is always good for gold. And we currently are facing uncertainty because of the US-China trade war. It is giving an acute sense of uncertainty throughout the world. But there are other factors as well, and these do tend to normally play out in favor of gold. We have also to note that over the last few years, we have seen the real interest rates have come down in the global economy, and that again is one of the strongest factor favoring gold demand. So we look at the scenario today and we feel that gold is very, very strongly positioned, and it will continue to be so for in the foreseeable future. The question here is not about what Fed does, it's about essentially how the consumer, how the investor actually has, what kind of returns they get. And that's what I said. If you look at most of the sovereign debt are in the negative real interest territory. And these two tend to play out in favor of gold as a class. And we see this now increasingly being discussed in the economic circles, and therefore as we look out, it's going to be very much in favor of gold for the foreseeable future. Well, let's put it this way, we can't give an exact time frame, but these are not short-term factors as we see it. There is going to be no real immediate solution to the problems faced by different economies, particularly the ones which have been driving up spending in the last couple of decades. And there is enough money. The world debt is today standing at close to $250 trillion. Now, these factors are not going to be solved in a hurry. So, to answer your questions, do you think that this will continue? Yes, it appears that this is not going to be solved in a hurry, so it will continue. These kind of uncertainties will have to be faced. There are technology changes as well coming through. We need to see how it is going to affect different economies now. So, therefore, fiat currencies will be under pressure across the globe. Well, I wouldn't want to comment on how oil prices will move. I'm not an expert in that. But all we can say is definitely when it comes to the market, certainly these do affect the price of gold. They affect the sentiment, they affect the savings, and they affect the price of gold. As we see it, we don't think that many of the problems are very short term. They are structural, and they will continue for a while. Whether it be oil, whether it be the other kind of trade wars that people are fighting, whether it be unemployment, whether it be real interest rate, there are no easy solutions to it. And many of this have also happened perhaps because we have actually moved away from gold as a currency. We see that now investors probably are going back to gold to hedge the portfolios across the globe. And we see this happening across, not just in the Western countries, we see it now in India, we see it in China. So we think that gold will be a beneficiary and it will be more explicit in the years to come. I mean, it's a very, very good question. Why do central banks buy gold if everything is hunky-dory? Why would they not go for other types of financial asset classes? Precisely therein lies the answer. Gold is a good diversifier, it is safe, it is liquid, it may not yield a return, but given the fact that the way other asset classes are functioning and the risks attached to it, central banks perceive gold to be a safe and liquid asset at this moment of time. That is why every central bank is now increasing its share of gold. I'm saying the majority of the central banks, including the Reserve Bank of India. And as I said, therein lies the answer to what people think about gold. Well, I'm sure that Reserve Bank, the reserve management is done according to a certain protocol, and those protocols do involve at various stages consultations. But Reserve Bank is the government, so therefore, I'm sure it is the government's view, it is the Reserve Bank's view that gold is a good diversifier at this point in time. Yes, absolutely. I think there's confidence coming back into the industry, and we have witnessed it during Akshaya Tritiya. Now, if you ask why is it, well, the way I would put it is we had 3-4 years, particularly with all the changes coming through, excise duty, PAN card, then demonetization, then PMLA, and then GST, etc. They did bring in a lot of transparency across in buying of gold, and that did affect the demand. Some of them were perceived risks that if I buy gold, will the government be after me? Those kinds of things were probably top of mind, and grey market was affected. There is no doubt about it when all these measures came in. Right now, what is happening is this pent-up demand is coming back. You see, India, for all the big statements about the aggregate demand, Indian per capita is 0.51 to 0.55 grams. Right? So it is not a very significant amount. If you compare it with actually some of the Western markets, even Germany for that matter, or US or whatever, you see that our per capita is still low. Okay? Therefore, there is a lot of pent-up demand as people's prosperity rises. We have actually moved a lot of people in the last 10 years from the poverty line to inching towards the middle class. They do save money. That saving, part of the saving has to be in gold because they couldn't earlier afford it. Okay. That is one reason. Second reason is you talked about the price. The price performance in the last few years, if you really look at it, was lackluster.